Everyone, welcome back. Okay, so let's talk about the market outlook for the next coming week, where we are going to look at the market trading from 6th of December to 10th of December. So what we are going to focus on next week is that the same old story on the Omicron. And of course, let's look at how the chart react first. So first, you are looking at the screen of the Dow Jones average, industrial average. So what we see here is that it had gone to the low that we have anticipated last week. And this low where we have actually expected some so-called fighting, consolidating or swinging up and down actually did happen. So we have a strong rebound on this particular day, on Thursday night, and Friday night. Almost all the gain was erased until towards the end of the night or the end of the day for the US market. They fight back strongly to close as a good candle pattern. So normally technical analysis, we call this a hammer, and if the market were to be able to rebound higher, say close at 35,140 points thereabouts, we might have a chance for more upward swing towards this level. So this level is quite important, so to speak, because this will help to define the going forward trend. So 35,537, because if it tests that level, that means that the Dow has a chance to go for swing trade for the whole month. Then maybe January start to pick up a little bit more. Of course, Omicron will play a very strong part, because if the variant is found to be less lethal, although it's contagious, it's easier to spread, but not as lethal as Delta. So the market can rally as well, can recover. And of course, not only the strength of this variant, the coverage of the current vaccines and the treatment for such a variant is also very important, can also give some confidence to the market. And next week, the core CPI announcement. So if the inflation were to subside a little bit, it may also help the market to move up. So last week, I have also boxed this up. So if the market don't have a V-shaped recovery, we do see some base forming before the upward movement comes in. So if the market can repeat this again, well, it is definitely very welcomed by us or most of the trader. Okay, so what we want to see going forward is that we want to look at. So next week, we really want to see a good retest of the 35,537 level as such, telling us that the market has a chance to recover. Now, if it fails to do so, of course, we want it to hold at least 33,000, right, the level, to hold any chance for it to recover going forward. Next, we are looking at the S&P 500. So S&P 500 has also traded to the expected range where we expected it to hit that level. And of course, hopefully the second part will come through where the rebound will take place similar to the Dow. So if we see the rebound happening, let me erase this scribbling, drawing. Let's look at the concrete level. We are looking at 4,630 level for the S&P 500 to rebound high, to test and break from there. Now, of course, failure to do so, failure to form a base may result in more downward action. and we are looking at the next support level. If we were to break this zonal support or this lower range of the zone support, 4,464, to move lower towards 4,327. Okay, so if we are looking at a bear market, of course, technical indicators do give us some indications where the if the support over here breaks, the bear market is usually below the 200-day MA, and if there's a continuous sell down, then it will happen to test its 200-day MA. Is it going to happen, or it will rebound from its 100-day MA as usual? So if you were to let me just clear everything and look at the arrow that I'm plotting right now, you will realize that the S&P 500 do tend to rebound from its 100-day MA for quite a number of times. Okay, so this is the time to rebound if the situation is not as bad as initially expected. Okay, so S&P 500 is very key. Let me just reverse the whole thing and get back everything here, and let's turn off the indicator to make a clearer view. So look out for this level 4,464 next week. Nasdaq is also testing a support level, and looking at this crucial support at 15,672. We want to see that this support can hold and rebound happen. If I were to do the same type of measurement for the type of corrections that we are expecting going forward, is that Nasdaq has this 8% downside typically when it failed to continue higher. If we repeat this again, well, we are almost there. So now we have around 7.3% downside already. So probably 1 or 2% down will hit to this lower support level around here at 15,348. So let's see whether next week what will come out. Okay, STI, we have a good rebound on this particular day on Friday after a fanatic sell-off on this particular day, starting from this day where on the 30th of November, then the selling continues. And as what we expected last week, the sell-off did happen, and we do find it actually managed to find support at 3,038. And the STI has to cross above 3,111 in order to move up higher. And we are looking at the gap over here, important gap to fill up in order to change a trend. So from 3,147 to 3,153. Okay, so STI has a chance to do so if it can shake off the selling pressure and close higher above 3,111 next week. Right, so that is about the market outlook. I will see you later on the watch list.